Hello, everyone. Happy Tuesday. How's everyone doing? We got Fed speak going on. We got Yellen's yapping this morning. U.S. Treasury Secretary Yellen, U.S. default could disrupt government operations such as air traffic control, law enforcement, national defense, and telecommunications. Default could see financial markets break with worldwide panic, triggering margin calls, runs, and fire sales. Boy, she's really starting with the panic now. Oh boy, so that's where we sit. Good morning, Patrick. Hey, Christo. Yeah, you got Amelia Island going on. Good morning, Sterling. Sterling putting in the news right now. We had retail sales coming in. Retail sales month over month weaker than expected on the headline numbers. And you got mixed with the gas and autos. Year over year, slightly better, but this is more important month over month. Let's see. We just had Red Book come out at 1.6. Still, that's a very weak number. We got industrial production coming up in 10 minutes. I'm sure Sterling will put it in here. We've had Bostic speaking. We had Mester speaking. We got business inventories at 9 a.m., so 30 minutes after. We got Barr's testimony. We got Williams. We got Logan. And then we get Bostic again. Yay. But is the market reacting to it? Home Depot, we had earnings. We'll take a look at that earnings. Home Depot did a beat on EPS, but a miss on revenue. And Home Depot trading down. You see pretty sort of weak this morning. Not many areas of strength. Let's refresh our group. There we go. Since retail sales came out and we've had Fed speak. Every sector is negative, but financial roughly at 0%. Consumer cyclical leading the charge down this morning. Fed Watch tool. Let's refresh this one too. Let's just see. We got 76 for a pause, 24 for a hike, and we're still on the pause, and then the massive string of cuts. So even though they're stressing still, no, we might be on hold, but we're not looking for cuts. The market's not buying it still in greed mode. Boy, this is Groundhog Day. We're still caught in the range. We're trading with 41.39 roughly. 41.50 is still the gamma flip. Nothing's really changing. And remember, it is OpX this week. So we're roughly a neutral gamma, slight negative gamma. Right now, we had, again, Home Depot come out this morning. That's the only one I did really look at. I did not check out C. After the close, not much today. Not much then Target tomorrow morning. All right. Where else do we sit? Good morning, Jacob. What else? Good morning, Options 22. Hey, Martinez. Thank you for the birthday wishes. It was uneventful, Christoph. Thank you again. Good morning, Heinrich. And I saw your comment, Heinrich. Thank you. What else? We don't. Sterling just keep putting in the news. Thank you very much. So far, inside day to yesterday, which was an inside day to Friday. So nothing's really changed. 41.54, 41.55 is the minor breakout level. The major breakout level is 41.64. 41.24.75. So 41.25 roughly is first level of support or the initial breakdown level. Then we got 41.11 and then 41.05. I'd be watching 4100 to 41.05 with the 50 right here. The 50 EMA. Other than that, this is just, you can see, there's just trading back and forth. Going into the open, I'd be watching about this 41.36 to the downside if that doesn't hold, if we get weak internals. The NASDAQ, again, key support coming back 13,375. The breakout level still 13,494. So I'm just going to be watching the internals right at the open. But even if it pulls back, it's pulling back into pretty major support still. I will start watching, and I'm not saying this is happening today, but in case anybody can't tune into every live stream, 13,250, especially on a closing basis, is really could start a potential rollover move. But nothing, we're not even close to that yet. The Dow, again, inside day to yesterday, inside day to Friday. Breakdown level about 33,170. Breakout level about 33,535. Other than that, I'm favoring still the downside because we have a triggered pattern, a double top pattern. And this little move up did not invalidate it. It's just slowly rolling over, but it's really got to work through this 33,170 key support. Russell, 1767, minor breakout level, but you see above there's a fair amount of selling pressure. So on any breakout, I'd be aggressive with trailing stops. The upside next level is still right around 1783. Key support, if it comes back down to retest everything, is about 1742 to about 1738. Other than that, there's nothing. This is just, these markets are a mess right now. The VIX, still no fear. I saw Christo, were you buying some VIX? I thought I saw. Which I don't think is a bad thing to do. I think the risk is for something, whether it's a debt ceiling, whether it's something unexpected, whether it's just sheer stupidity, whether it's more bank stuff. I think the risk is for a spike for some time, so I would not be trying to time this with short-dated stuff. I'd be trying to do something with longer-dated stuff. The DAX still caught in the range. So many things are range-bound. I mean, the DAX has been in this range, roughly trading where it opened back on April 17th. So nearly a month it's been in this range. Not looking at much there. The notes roughly trading where it closed back on the 15th of March. So 2 months of nothing. I mean, unless you're micro scalping this stuff, there just aren't. And this is just a mess. This is a mess. Dollar index, I was watching for the one-day pause. Unless something really changes with any numbers or any Fed speak. Don't know if that's going to trigger today. So then I'll be patient watching for a pullback or rotation setup if we don't get the reversal through 102.31 area. Other than that, or we could get like a 3-day pullback, rising rotation zone back to your major support area. Your major support area is right around 101.70. Crude, not much. Not even on a rally into the rotation zone. There's just not a great setup so far in crude. So natty gas, I'm actually surprised at this strength, but there's too many stopping points. There's too many stopping points. There's from my perspective, not a great setup here. It's more risk. Gold, little breakdown. Gold actually setting up. Gold, where's Pep when you need him? This is technically a double bottom. It would need a 4-hour close above 2027.8, 2038.90, 2044.40, and those would be the primary. And that's not a major pattern, that's a minor pattern. And if it rolls over again, it would become a triple. So then it would be off the table. Silver, we do still have a little minor double against the already triggered double top. That would not invalidate it at all. It would just be a bounce back. Oh, copper still rotating back down. Copper has a lot of weakness in it right now. What else we have? We have US dollar, Japanese yen. Pulled back a bit, but trying to march higher. 137.45 is still the first target there. And then 136.95 euro, which is a mess right now. I really need a break below about this 108.40 to get interested to the downside on a rotation back down. Pound, nothing. boy, Bitcoin, nothing besides the sloppy, horribly sloppy triggered pattern. Tesla, we'll get to spiders and Qs in a second. Nothing besides looking forward to this breakdown play, isn't it? And it's some Tesla day today. So, gonna keep an eye on that after the market close. Let's take a look at the spiders. Spiders would just be, so right now on any rally, we're still opening within yesterday's bar, which was an inside day to Friday. But on any rally, it would be for the gap fill. The gap fill would be 413 roughly. And then I'd be watching 413.70. Really, it needs to really start getting about 414 before a breakout on the spiders. To the downside, if we do break lower, just watching yesterday's lows, really. Where there's buying pressure, well, there's a fair amount of buying pressure, but yesterday's lows, let's see. Yesterday's lows coming in first about 410.23. Then I go back down to these dual lows from Friday and Wednesday at about 409. And then your key support 407.20, which is the fit rising 50. Then I'd be looking for the gap fill back to May 4th. So if we did break out above that 414, your next key area is 415.90. The Qs, again, broken record on slight gap down on a rally. 326.79 is the first target. 327.58 is the next target. And then we don't have another key target till about 330.75. Key support coming in at 324. If we break below that, we have a lot of support base below it, but I'd be looking about 322.80, then about 321.60. Good morning, Donald. If there is a default, wouldn't the bonds sell off massively, which would spike the yields? I don't know. I've seen people analyze it both ways. I don't know how the bonds are. Theoretically, yeah, they should sell off. They should sell off. But we're in nutty market conditions. Small doubles on the spiders and the Qs. I didn't see any on 5-minute charts. I mean, you got this little thing. You got this little thing, which is getting into, it's in double territory now. So if you want to go down, I'd be watching on the 15-minute. It just hit these levels right, from yesterday. So if you want to use your conservative targets, you got 410.84 and 410.48. And on the Qs, you got 324.90. I just go 325, 324.60, 324.25. And those might never trigger. Now remember, if you get a gap down and another rotation back up, it's pretty much going to invalidate them. So keep that in mind. New. What did it do? Did it? All right, we took a look at this. So obviously you got a slight beat with revenue. Next key level 654, looking to open 647. So 654 to 663 would be pretty key right there. And 663 is also a pretty substantial breakdown zone. So those are your levels higher. And then above that, 688. And then it's about 720 if it keeps running. I got gold for you, Pep. I already covered that. Hey, thank you, Paul. Good morning, Todd. Thank you, Royal Palms. What else did I miss? I'm just going back through to see what else I missed. Hey, John. All right, capacity use. Thank you for putting in there. Where's my... What did the capacity utilization numbers come out with? Let's see, industrial production coming in stronger month over month. So that's pretty interesting. Capacity utilization coming in roughly in line, slight miss there. Nothing, I don't think that really had any effect on anything. Not really. Not really. I disagree. This brick stuff is way overblown. It's way overblown. It's just something that's getting pumped all over FinTwit like the dollar's going to just disappear. The dollar's not disappearing. Still, the majority of trade is done in US dollars. There might be some side deals. There's more side deals happening in off-dollar things, but they're not the major long-term transaction. I think it's way overdone. Way overdone. Now, at some point, yes, there will be much more pressure. But again, China's not taking over. I mean, I see people, China's going to take over as a reserve currency. No, they're not. They're still pegging. They are not. They can't. So, all right. Jeez, boy, unless this breaks out of the range, there's just not a lot of stuff going on. And looking for, we'll watch the open at 41.35 area to see if we get support. If we break down that 41.24. Thanks, PMG. PayPal. And then I'm going to finish prepping for Duel. Hey, we're almost to the next 60.83 target. Yeah, any bounce in PayPal would be going into major resistance, so I'd be looking for a rollover play when PayPal does bounce. Boy, PayPal, just a disaster. Just a disaster. Still trading 26 times P to E in non-growth mode. Outside OPEX, any big news events for the rest of the week? Let's just double check. Let's just double check. So tomorrow, nothing. Thursday, yeah, we always have our jobless claims. We got Philly Fed stuff. We got more Fed speak, but I don't know what they're going to say. You have the Consumer Board Leading Index, so you got some minor stuff. But with options OPEX for Friday, no, I'd say OPEX is the next major thing. I would not ignore Thursday morning data. But that's about it. Again, we have so much Fed speak, but the market doesn't even seem to be reacting to Fed speak. So no, it's a quiet week going into Friday OPEX. So there you go, options 22. In the short term, I would agree. Until it gets out of this area, there's only these short-term setups, Pep. All right, and Pep, were you in here when I did cover the potential double, the little mini double in gold? So I'll be keeping an eye on that. With that, I will see everybody after the close. Have a wonderful trading day. If you don't have any good setups, remember, sitting on the hands is a very viable option in this market. Talk to everyone later. Bye for now.